WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Chuck Zada from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the past 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you'd want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions that you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. How can you ensure that your kids' inheritance can be protected from future divorces?
Well, that's a great question, and many people want that, right? You never know where your assets are going to end up if your children get divorced after you die, right? That's really the key. And so a trust can do that for you, folks. When you have assets in a trust, you can design it any way you want. Have it set up where it says equally to the kids, and then have it held in trust. You can allow the kids to be trustees of the trust, but you allow them to manage and invest the buckets of money, which they can't take from each other and from each other's bucket. But in order to get money out for themselves or their own kids, they would need another trustee in their sole discretion allow for that. And they can remove and replace this other trustee anytime they want. And it's that sole discretion with all this control that prevents them from actually owning it. And so when the divorce comes and they want the money, for the other side wants the money, the other side says, here, give me half the money that's in the trust. They say, ask the other independent trustee. Sole discretion, folks. You see where it goes. If they don't own it, it's not a marital asset. It's not subject to the divorce. The trust owns it.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called How to Leave Assets to Your Beneficiaries. Call now for your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family. 866-848-5699, or you can request it at LegalExchangeShow.com. Once again, 866-848-5699, or you can get it at LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. Beneficiary planning and asset protection go together like peanut butter and jelly, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zada and Mike Armstrong.
Welcome back to the Financial Exchange. Happy Tuesday. Happy not rainy Tuesday. We got a jam-packed show today. Apple released a new financial services product that I'm pretty interested in. We've got a few more bank earnings to run through, but I want to start off with a few of those banks, and specifically a study that was done by a few people looking at the interest rate risk on those banks. It's Mike Armstrong, Tucker Silva, and Paul Lane with you this morning. And certainly since the Silicon Valley Bank, this has been the only real thing that mattered, is financial health of our banks, and we are getting earnings from a whole slew of them this week and started last week. And by and large, I would describe the news as not shocking and not hugely disappointing either, although there's probably some accounting maneuvers going on there that people should be aware of. But the point that this study did is that very few banks today, and even very few banks at the beginning of 2022, were really hedging against the risk that occurred in 2022, which is interest rates shooting up at a pretty significant pace last year. This is, in my opinion, a pretty big issue for 2022, perhaps less of an issue for 2023. But what exactly did the study find? And granted, this hasn't been peer-reviewed yet. It's just been posted out there as something that they looked into. But what general conclusions did they find about what banks were doing heading into last year?
The biggest takeaway was, as you mentioned, that very limited amount of hedging that was going on. We criticized Silicon Valley Bank very heavily for the fact that it didn't take any real effort to hedge against their portfolio. They had hedged against about 12% of it. This is Silicon Valley Bank, of its securities portfolio at the end of 21, but only less than 0.5% in 2022. But I want to make a distinction here. The study goes on to say that nearly 200 other banks had exposure to these unrealized loss that we talked about with Silicon Valley Bank. Yeah, that's obviously true. Interest rates rose, and typically what banks were doing is that they take on deposits, and then if they can't lend it out, they're buying U.S. government securities against those deposits. So to me, it's not surprising that other banks had this, significant amount of unrealized losses. The issue with Silicon Valley Bank is you had a very concentrated base of depositors, all high net worth, and the liquidity ratio, how much that they had at the realm for deposits. Granted, the withdrawals that they had, really no bank could have sustained, but that was really more the issue, is the makeup of Silicon Valley Bank and it not recognizing its risk as a bank because of its consolidated depositor base versus some of its other peers. So that's why I don't feel it's fair to group them all together.
So I think there's a few critiques going around. One that I have heard over and over again is the asset management arm and the risk management arm at Silicon Valley Bank, when it came to their investment portfolio, was doing a poor job. And I think the conclusion of this study here, which hasn't been peer-reviewed and we haven't seen the raw data behind it, is they're not alone. There were a whole bunch of banks that were making the same stupid decisions going into 2022, which was receiving a whole bunch of deposits, buying long-dated government-backed securities to hold those long deposits, and then not hedging against interest rate risk. The study concludes that today, across the banking sector, only about 6% of bank assets were protected by interest rate swaps. I don't know when that conclusion was. Was that at the beginning of 2022? Is that the beginning of 2023? But that's my conclusion, is that there's been a lot of attention paid to Silicon Valley Bank and a lot of criticism thrown at Silicon Valley Bank's management team, which I think there should be, about, hey, they managed their portfolio really poorly, and that's what led them to this situation. My conclusion is, no, there may have been a few other 100 banks that did very similar things without hedging against interest rate risk, perhaps not to the same extent that SVB did. What made them unique and what caused them to fail is your point, Paul, which is a combination of bad investment management and risk management combined with a concentrated number of customers.
Mm-hmm. Exactly.
I mean, just a very different business model than, say, your Citizens Bank or your M&T Bank that just do not operate in a similar fashion.
No, if you have the Citizens Banks of the world that have a bunch of retail customers that may have $10,000 spread across hundreds of thousands of accounts, much different than just high net worth people who are using these bank accounts at Silicon Valley Bank for tech startups and things like that. Banks are built off of the higher interest rates in the environment, the more income that they're able to generate off of lending out the money. So they're inherently interest rate sensitive. And some of the peers I don't feel should be grouped in with Silicon Valley Bank. And quite honestly, if they did not have this run on the bank, Silicon Valley likely could have weathered through that storm. They went to do that equity raise to raise additional capital because of the balance sheet becoming unhinged. But if it had gone through and there hadn't been this massive draw on deposits, then they might have weathered this storm appropriately.
Right. So, I mean, what a lot of these banks are now facing is they're not receiving a run on the bank. Perhaps that's because they have made better decisions about who their customers are. Perhaps they have fewer customers or fewer portion of their customers with non-FDIC insured deposits. And some of them, perhaps they did a better job managing the risk of their assets. But where a lot of these banks are now sitting, I believe, is a whole bunch of securities that they hold, a bunch of loans that they made effectively to the United States government at, best case scenario, maybe 4% interest, worst case scenario, maybe 2% interest for 20 plus years. Mm-hmm. And now they're facing a situation where just naturally deposits have started to move away. Forget about a bank run. That's not what I'm talking about. Just naturally, because there's not as much stimulus going on, because people are spending money, because inflation is high, they're withdrawing out of their bank accounts. Furthermore, they're shopping for yield at this point, so people are going from one bank to another. We'll talk about Apple's new product and how people are moving money from bank accounts there. And so these banks are now finding themselves in a situation where, oh, okay, we have all these long-dated assets. We marked them as hold to maturity. We might not be able to hold them to maturity not because of a run on the bank, but just because of typical bank operations. And so now we're needing to attract new deposits. Mm-hmm. And so we're doing things like offering 5% CDs. I saw that we covered that yesterday. A few regional banks were offering 5+%, short-term CDs or 4% money markets. And that will fill the gap, but it creates an obvious profitability issue. Right? My assets are long-dated assets paying me, the bank, 3-4% interest. My deposits, I'm having to pay out 5% interest on these new deposits coming in. That probably doesn't lead to a failure of the bank, but for some of these banks could lead to some serious profitability issues over the next few years.
Real long-term drive. That's a really good point on it. Perhaps other areas that are weaker, and we'll get into the bank earnings, will pick up some of that slack, but it's a very prudent point to make that long-term it could be something that hinders these companies.
But generally speaking, yeah, to your point, we generally think of higher interest rates as a net benefit to a bank. Yep. They can loan out at a higher rate. They can get a bigger net interest spread because they pay little on their checking accounts and then loan out that money for mortgages and other things. The question is, can they attract those deposits to be able to loan out at this stage? Are they all going to Goldman Sachs and Bank of America and JP Morgan, or will these other banks be able to attract them? And I suspect that that's why a lot of these banks did not hedge their portfolios. They said, well, we might have losses there, but when the money comes around for, when we can make loans out at these higher interest rates, we'll be making a whole lot more money anyway, and we'll make out for any risk there. Admittedly, I think perhaps they should have been hedging against the scenario we faced last year, which was the fastest pace of rate hikes ever. And that probably wouldn't have been a terribly expensive hedge because it wasn't very likely to happen at the beginning of 2022.
Here's the other caveat on a 20-year bond is that interest rates could go back the other direction, and all of a sudden that hold to maturity bond's looking a little bit better.
Guess what happened this year? Exactly what Paul just described.
Right.
So, those banks that were still holding those securities, guess what? They just went up in value pretty significantly this year as interest rates came down. Let's take a quick break. When we come back, Apple's got a new product out there. We'll talk about that next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Financial planning never sleeps, so as spring comes into full swing, now's a great time to spring clean your finances. The new guide from the Armstrong Advisory Group may help you do just that. This is Mike Armstrong, and our guide talks about planning for a one-time expense this year, like a new car or a long family vacation, and how that might affect your finances. We'll also look at how to plan for any upcoming major expenses in future years, like buying a new home or paying for college. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's yours free of charge by calling 800-393-4001. This guide's chock full of information that may help you understand how to handle any changes you're dealing with now or may deal with down the road. So call right now and get yours today. Again, that's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699, or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Spring is here, but it's still cold in New England, so now's the perfect time to head to America's Caribbean paradise, the United States Virgin Islands, consisting of St. Croix, St. Thomas, and St. John. The USVI was recently voted the top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John were named the best Caribbean islands to visit for 2023 by the Caribbean Journal. So act now and fall naturally in rhythm with the heartbeat of the islands as you enjoy some of the most pristine beaches in the world along with world-class culinary cuisine. Visit usvi.com right now and book your next vacation today. That's visitusvi.com.
Tucker, Paul, you're both iPhone users, correct?
Yes.
Do either of you have the Apple credit card?
No, but I might get it soon.
Okay, so why?
Why? Yeah.
I keep talking and then we'll talk about it.
Okay. So you may get the iPhone savings account you're talking about, regardless of the credit card situation.
Well, you need the credit card to get the savings account.
Yeah, correct. Okay, so let's start with square one. A few years ago, Apple rolled out a credit card in partnership with Goldman Sachs. At the time, I looked at it and said, look, it'll probably do fine because people love Apple, and I'm sure they'll have some nice tools to allow you to manage the credit card. But what's the incentive for me to switch, right? I can load my Fidelity or Schwab or Capital One credit card right directly into my Apple wallet. I can use it to make payments on the Apple system, so why would I need to use this credit card? And I think the credit card did okay, but certainly for Goldman Sachs, they weren't happy about it because they didn't see, they saw higher default rates and higher, just not as much for them on that credit card as they were anticipating. Although we'll see, because that was also timed with when people weren't carrying balances on their credit cards at all. So, we'll see how Goldman Sachs does on it now. The new product that they're rolling out exclusively, to Tucker's point, for Apple credit card holders is that they can open an account with a 4.15% APY. So it is a money market savings accounts, again backed by Goldman Sachs, allows you to, with no minimums, apply for a 4.15% savings account. Now, a few things about this. This is by no stretch the best FDIC-insured savings account you can get. I frequently get asked this question. I am sitting on Bankrate.com's website right now, browsing through the highest interest rates you can get out there, and 4.15% is not the best. The best that I can see right now is 4.81%, and it is from a bank called UFB Direct. Either of you familiar with UFB?
Nope.
Okay. Next one on there, 4.75% from CIT Bank.
Nope.
Okay, so both of these are FDIC-insured banks. I happen to be familiar with CIT because they originated my mortgage years ago. But I would imagine most, and the next one is 465 from Basque Bank. And when I talk to people about, hey, what's the best rate you can go get, they get directed to something like this, and they're like, never heard of this bank. Are they safe? And part of my point is like, well, it's FDIC-insured.
Which we just found out. That's good.
It's good.
Yeah.
Works. So it's FDIC insured, but when it comes down to, well, what's their website like? Do you know what the terms are? Am I going to get penalized if I take money out of this? People have a lot of questions, and I think they're generally hesitant to go park their money at a bank that they are not familiar with. Apple solves all that problem.
Mm-hmm.
I think this is going to do exceedingly well.
I do too.
Really?
Now, granted,
Maybe
the threshold of having the credit card with Apple is a bit of a hump to get over. So that is one part where I say, okay, maybe it's not going to attract everyone. But how many people are you getting asked questions from? Like, hey, I've got this money in the bank right now. What should I do with it?
Yep.
Like Bank of America or JP Morgan, they're not paying me anything on this. What can I do? And my answer is oftentimes, well, hey, there's a few websites out there where you can compare the best rates out there. If it was available to them right on their iPhone and could easily transfer right there to a company like Apple that they already have a pre-existing relationship with, I don't know. I think this is a sound one.
I mean, this is coming from a tech player who's probably the most well known for reliability for personal data security, don't you think? I mean, they had this whole marketing campaign with the Apple logo turned
whether
into
it's true or not,
padlock.
I think they maintain that reputation in the tech space
very well.
Certainly in the smartphone space.
And one step further,
the location tracking stuff. There's plenty.
Show me a cell phone company that doesn't do that.
Yeah, what are you talking, like the Apple Tag? Is that what you're talking about?
They've made the changes to allow for tracking on specific apps, but for a long time, their profitability was kind of driven by the fact that basically apps on their platform had all sorts of access to your data to know that you were looking up, lawn equipment, and then the next thing you know,
Sure.
ad showed up, and that's how it goes.
I mean,
I'm
that's
not
everywhere.
saying that's how
Yeah.
the business goes, but I push back a little bit on what you guys are. Your
Not as
sentiments.
optimistic.
Not
Lay
as
it out.
optimistic because their foray into the financial services hasn't been strong. To Mike's point before about the Apple credit card, I can't speak to the benefits for getting this card. Does it provide certain? Is it a cashback deal? Is it certain incentives on?
I think there's 2 or 3% cash back when
Okay.
you use Apple Pay, which I do frequently.
That's the other piece that I would say that Apple Pay is on a lot of people's phones, but according to data that I looked up recently, 6% of U.S. users actually use Apple Pay for purchases. It just seems like they've really tried to make inroads in the financial services market. I'm just more wary on their ability to do so. Now, partnering with Goldman Sachs is something that they've done in the past, and they're doing now with this initiative. So perhaps with that partnership, they can be a little bit stronger. But I am just a little more skeptical on their ability to really make inroads here. To Mike's point, it's a middle-of-the-road savings rate. I guess maybe because we're in this world every single day and I see the rates that...
I think if you told people that 415 is a middle-of-the-road savings rate, they'd be shocked to hear you say that.
Yeah, that sounds high-end to me.
I mean, to your point, it's not, right? I'm looking
Just
right
'cause
now at least a dozen banks who are offering APYs on their FDIC-insured bank accounts that are higher than 415.
What, like 4.75?
The highest that I saw was, 4.8 something, but there are plenty of
Okay,
them
so
that
who
are
am I
at
going to
4.
go with? A no-name bank
There's
with
gotta be-
4.8, or am I going to go with a trusted name in Apple?
So
What's
Citizens pays 4.25.
Okay. What's Ally Financial?
I don't know.
Okay.
I don't see them here. But there are plenty of banks that offer a slightly higher rate. But I think that hump to get over, if Apple was offering this without the credit card, I think it would be a slam dunk. I think
Yes.
they'd have a ton of signups.
Yes.
With the credit card, okay, it's going to be a little bit tougher. But even still, I think this is a pretty smart move for them. I think Goldman, I think the jury's still out if this is working out for them. For Apple, I think they seem to think it's a slam dunk. The more they can get into financial services, I think they're excited about it, especially when they take on none of the liability of it because all they're doing is providing the tech platform for all this occurs. They're not providing the FDIC insurance. They don't have to go invest the assets of the depositors that come in.
People's lives revolve around these iPhones now, and has been for several years now. If you're adding the financial element of this with a savings account with that percentage yield, I mean, that's everybody's life in one place.
Couldn't agree with you more on
And
how...
it's the most user-friendly software or technology out there. Literally, it's the easiest.
Couldn't agree with you more on how just instrumental they are to our daily lives. If you look at the revenue breakdown of Apple, this would fall on the services component of things. And
It's not going to make them anything.
Yeah, right. And
It's
so-
not like, don't get my excitement about this confused with thinking that it's going to move the needle for Apple stock or anything like that. Like,
Okay.
No, this is tiny for them. But I do think it attracts users. I do think that it really what it does. You were never going to leave Apple beforehand. If you have your credit card and your savings account from sitting there,
stick here.
now it's like there's nothing that can move you from Apple. You are completely stuck there for the rest of your life. By the way, one just kind of strange thing that I saw that is a little bit weird to me, the Marcus Goldman Sachs high yield savings account, 3.9%.
Wow, that's the one I usually throw out there. As, they
Like, hey, we're going to give it to the Apple customers at 415, but for our own dedicated customers that come directly to Goldman Sachs, we're only giving
that
you 3.9.
Marcus has been a failure. That has not done well.
Quick break here, Wall Street Watch when we come back.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, if someone is going to be experiencing an income change this year, How do they go about planning for that?
Well, I mean, one, you need to know what might cause it. And for a lot of folks heading into retirement, it might be common sense. Hey, I'm starting Social Security. Hey, I am turning required minimum distribution age, or I'm just retiring and I'm seeing an offset of that work earned income. And it can affect everything from your taxes to your retirement planning.
Where does someone start as far as how having a plan in place to potentially replace a loss of income?
Yeah, so I mean, I think where you need to start is the buckets approach. So where is my money held? Where are my finances going to come from? Where's my cash flow going to come from? So very common one. I've been saving my entire career. I've been earning an income, and now I am stopping work in, October of 2023, and I need to plan for that. Well, I think the first thing you do is you map out those cash flows. So I have expenses. I'm no longer going to be pulling in an income. Saving isn't necessarily as important anymore, but what is the bucket of money that's going to cover the first 6, 9, 12 months of those expenses, and then map it out further, next 5 years, next 10 years, and go from there.
Folks, the guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways you can request it. First, you can call 800-393-4001, or you can go to armstrongadvisory.com. That number again is 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit armstrongadvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's armstrongadvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
April is National Financial Literacy Month. It's a good time to consider your life's goals and what you need to do to achieve them, especially when it comes to understanding the best ways to manage your money. Having a trusted partner like a credit union can prove to be extremely valuable because your financial well-being is at the heart of every credit union. Learn more at bettervalues, betterbanking.com. Well, markets were in positive territory, but have reversed course and are dipping into negative territory. As Wall Street reacts to more first quarter bank earnings this morning, where Bank of America beat forecasts on top and bottom lines, while Goldman Sachs reported quarterly revenue that fell short of expectations. Shares in Bank of America are down 1.5%, while Goldman Sachs stock is down by 2.5%. And Paul and Mike will have more on those banks in a moment. But at the moment, the Dow is off by 0.5% or 177 points. S&P 500 is off by 8 points, and the NASDAQ is off by 26. Russell 2000 dipping into negative territory by 2 points. 10-year Treasury yield, that is off by 3 basis points at 3.55%. And crude oil is edging higher, trading at $80.91 a barrel. Johnson & Johnson also posted first quarter results ahead of the open today, where the drug and consumer products company said its sales climbed 5.6% to $24.75 billion, above analysts' estimates of $23.67 billion. Adjusted earnings of $2.68 per share also beat forecasts of $2.50 per share. Johnson & Johnson CEO noted a strong performance across all three business units, while the firm also upped 2023 guidance midpoints. However, shares are off by 2.5% so far today. Meanwhile, shares in Sunrun are down by 0.5% after KeyBank upgraded the solar company's stock to overweight from sector weight, saying the stock could rally more than 31% from Monday's close as its market share increases in California. NVIDIA also received an upgrade from HSBC by 2 levels to buy from reduce, noting the chip maker is showing it has more power in pricing AI chips than previously thought. That stock jumping by over 2% so far today. And investors will turn their attention to more earnings after the closing bell today, where Netflix will reveal their anticipated quarterly results and will also provide more detail on cracking down on subscription sharing in addition to their ad-supported plan. United Airlines will also report after the closing bell. I'm Tucker Silva, and that's Wall Street Watch.
We had another mega too-big-to-fail bank report earnings today. That would be Bank of America, as they topped estimates, fueled in large part due to fixed income trading. So this is one of those areas of the banks where not every bank is treated equal, and a lot of it comes down to execution, as we saw with Goldman Sachs saying that their fixed income revenue fell 17%. So purely an execution issue between Bank of America and Goldman Sachs. Not that I am well-versed enough in either of these two to determine why they succeeded so much more than the other. Bank of America, that is, so much more than Goldman Sachs. But the other big piece for Bank of America, they pointed out that their net interest income rose 25% for the quarter, just the first 3 months of the year. That likely does not reflect the benefit and impact of all the deposits that flocked over to Bank of America post-Silicon Valley Bank. Purely just the bump in interest rates compared to what Bank of America pays out on those checking and savings accounts, which they are pretty famous for. Famous for almost nothing.
Almost nothing. Incredible, Mike, just to see what they have in terms of deposits. They're at $1.91 trillion. That was up from $1.88 trillion as estimates had it for this quarter. So just a ton of cash sitting on the books. When you see that number, you realize why in my checking and savings, which I don't have much there, I'm not getting any interest on it. But I bank there because I don't want to switch things around, and they know it. And it kind of speaks to the divergence between Silicon Valley Bank. Granted, the sizes aren't incomparable, but my checking and savings balances, there's probably millions like me who it's very sticky. It's not going anywhere. Very easy not for them to pay interest on it versus some of these other alternatives out there. But it seems like a very strong quarter from Bank of America. Net interest income, we mentioned the fixed income trading. That was fantastic as well. Investment banking revenue was down, but that's to be expected. There's very little mergers and acquisitions activity or IPOs going on here. But overall, seems like quite a strong quarter compared to that of Goldman Sachs, even though Bank of America, I believe, is off a percent or two today.
They are. They're up quite a bit over the last 5 days, though. I think they moved up in reaction to their true competitors. So JP Morgan Chase and Citi, Wells Fargo all reported last week, and they were moving up in reaction to some of that and then moved down slightly today on this news. Goldman Sachs, as we mentioned, different story, not quite the retail depositor as Bank of America is, so very different business makeup that they have on that side of things, but they were impacted by a kind of surprise miss on the fixed income side because that was a big driver of revenue, certainly at Bank of America and other banks as well. They clearly missed out on that in the first quarter. When it comes to these big banks in general, I'm curious to see how things develop over the next few months. Clearly with the regionals, I think what they're going to be facing is deposit flight. Mm-hmm. They already have to some degree, but I think it has sparked an interest from depositors to say, okay, yeah, maybe my FDIC insurance is fine, but I've got this money in the bank and they're not paying me enough, so I'm going to go look around elsewhere because I was starting to worry about my bank going under during the Silicon Valley Bank collapse, so it prompted me to start being aware of this sort of thing. So I think those regional banks are going to face some of that deposit flight. I genuinely am not sure if Bank of America and JP Morgan will face similar yield shopping deposit flight. I think certainly they don't have to deal with the concern over FDIC insurance that the regionals did. Right, wrong, and different. Those regionals have faced deposit flight because of the concern about their business makeup. Bank of America doesn't need to worry about that. But there are a few banks that pay as little interest as Bank of America and JP Morgan Chase. So will those customers go elsewhere and shop around? And I would say probably some will, but if you just left Silicon Valley Bank where you're getting paid nothing to put all your business's money at Bank of America where you feel safe, you're probably not running around shopping that and looking elsewhere. So that net interest income might be a huge portion of their business for a while.
To answer the question that you kind of theorized out there is that because JP Morgan and Bank of America offer a multitude of services to kind of make their business easier, whether it's mobile deposit with the Bank of America app, the frequent access to ATMs around the area, that's why I bank with them, or the online capabilities in general. The same applies for JP Morgan with its Chase products and the cards that they have. Contrast that with Goldman Sachs, who tried to make this huge jump into quote-unquote Main Street with its Marcus launch. They don't have the suite of products to make it as sticky, those deposits in Marcus, as some of the peers do. And that's why I don't leave Bank of America, because of the products that they offer. Yeah,
Goldman's, I don't know. In my opinion, Goldman's foray into retail banking has been a bit of a failure so far.
Yes.
Now, that could turn around. I think part of the reason it's been a bit of a failure is that their Bank of America credit card did not work out the way they thought it would. That could change, right? If suddenly everybody's running up interest on their credit cards now because they don't have as much stimulus checks coming in, then certainly that could change and be a little bit more beneficial to Marcus. But look, it comes down to Goldman. You guys are not a retail bank. You've never been a retail banking company, and why were you deciding to jump in over the last few years? Was it an image problem that you thought you were suffering? Was it, really thinking that you could execute in that retail space better than your giant competitors? Because what you've done really, really well over the last several decades has been catering to the ultra wealthy. Mm-hmm. Give me an IPO, give me wealth management for the richest people in the world. Goldman, you've been knocking the cover off the ball on that for decades. I'm not sure that your skill set really applies to opening high-yield savings accounts for people with $300.
No, it clearly didn't work. It was probably a diversification of revenue. They're heavily reliant on the trading revenue, like we mentioned, the IPO market activity, and catering to the ultra-wealthy, so trying to have another sort of tool in the tool belt, but clearly wasn't successful.
Let's take a quick break here on the Financial Exchange. When we come back, Massachusetts looks like it's on the precipice of passing a pretty big change to taxes. We'll talk about what that means for you and perhaps your company in Massachusetts next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Spring is here, but it's still cold in New England, so now's the perfect time to head to America's Caribbean paradise, the United States Virgin Islands, consisting of St. Croix, St. Thomas, and St. John. The USVI was recently voted the top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699, or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Financial literacy is power. The more you know, the better you are at managing your money. In observance of National Financial Literacy Month, consider a credit union as your educational resource. Did you know we offer classes and guidance on money management? From establishing credit to buying a new home or saving for retirement, your financial well-being is at the heart of every credit union.
Learn more about credit unions at bettervaluesbetterbanking.com.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Paul, this is going to be 2 days in a row that we have some breaking news. You have some breaking Southwest news for us.
We are back. We're back at it again. Southwest Airlines pauses departures after reporting technical problems
nationwide.
Here we go.
Who's
the Joker.
reporting that?
This is coming from the FAA.
Oh, boy.
Said the carrier requested the pause after some technical issues this morning here, so we'll have more on it as the information comes out. I don't know if this is directly correlated with the stock down 3% as of trading right now.
3% down.
Trading right now. 3% down. 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 3% down.
Not good.
Not again.
Not good.
Not
Middle
again.
of school, April school vacation week here in Massachusetts. Good luck, folks.
Yeah, this was
hopefully it doesn't drag on.
About just under half an hour ago.
Yeah, there you go. Well, we'll see where that goes. We'll keep you updated, folks. Massachusetts employers have landed, well, maybe landing a long-awaited tax change. So quickly, when it comes to companies in the state of Massachusetts, we in Massachusetts, because of course we do, have a pretty weird way of calculating how they owe taxes. We do not use what is most commonly used, which is a single sales factor to determine your corporate taxes. So most states, including all but Massachusetts and the Northeast, use this method where you owe taxes on the sales in your state. You likewise owe taxes on sales in other states to those states, and you add it all up, and that's your tax bill. In Massachusetts, we use the fancy three-factor method that sets corporate tax bills based on a mix of in-state property taxes, local employees, and sales as a method for determining this. Sounds complicated. I'm glad I'm not a CPA trying to figure this out for people. But this is one of those items that looks like it's going to be done away with in the tax bill that was passed in the Massachusetts House. It would cost the state about $79 million in foregone taxes going forward, it's assumed. Also, for those saying this is unreasonable, unfair, well, a few things about this multi-factor method. One, big industries in Massachusetts had already gotten carves out from their sectors. So Raytheon complained about it, so they did a carve out for defense companies. Then everybody else complained, so they did it for every single manufacturer in the state of Massachusetts. Then mutual fund companies complained, so they got a carve out. So big employers are already not paying taxes this way. They seem to be just catching up on this one. This bill I would break into two pieces. One, there are some tax benefits for individual families. We talked about these where they are rolling up a few of the tax credits for individuals with dependent children. They're giving tax credits for rent payments and things along those lines. So there's some benefits there. The other pieces to me are they are tax reductions for high net worth and high income and some businesses. Really what I think they're going after are some of the big items that make Massachusetts a true outlier. So this was one of the things that made Massachusetts a real outlier in the entire country. The estate tax was another one that made us a real outlier. They're doubling the estate tax, so we're not the most burdensome state in the country for estate tax. The short-term capital gains rate, again, big outlier there. The only still weird one that I have not seen talked about, which because nobody really is aware of this, but Paul, are you familiar with the deductibility of IRA versus 401k contributions in the state of Massachusetts? So, only state that I'm aware of in the country that does this. If you put money into your 401k, it is tax deductible on both the federal and the state level. If you contribute money into your IRA, it is only deductible on the federal level.
Interesting. Huh.
So only in Massachusetts do you have to keep your contributions to a traditional IRA versus a traditional 401k separate, because when they come back out, the taxability to them on the way out is also going to be different. Only here in Massachusetts do we have this fun little way of doing things. To my knowledge, it would not be a tax hit at all. It should be cleaned up. It's just a very silly thing that, once again, benefits 401k holders and hurts individual IRA owners that can't have one.
It seems like, just to summarize the story here, Mike, they're taking steps. We covered a story the other week where there was an outflow of people from Massachusetts trying to get it up to the levels of other states so that we don't see a further outflow of residents and to benefit businesses, because this tax piece, it is a little convoluted. To me, it benefits the TJX. It benefits a lot of these companies that have their employees here in the state.
Hurts others.
Yeah.
Hurts others.
Ones are penalized by it, but the in-state ones, it takes care of our own. I guess.
I think that's the net impact there, and it's just funny to see these things going on at the same time that the millionaire's tax is also happening at the same time, because for some businesses, for some CEOs, and for some C-suite level executives, there's going to be a big push to relocate, especially if you're Massachusetts is a small state. You do business in Lowell, you do business on the border of New Hampshire, on the border of Rhode Island, there might be a big push to say, okay, we're sneaking over the border here because I don't want to face that millionaire's tax. We will see. Only time will tell on that one. Folks, It's that spring time of year where we're all doing a little bit of cleanup and organizing. And so as spring comes into full swing, now is a great time to spring clean your personal finances. The new guide from Armstrong Advisory Group can help you do just that. This is Mike Armstrong. And, our guide talks about planning for instance, one-time expenses like a new car, maybe a long family vacation or wedding, how that could all impact your overall plan. How do you best save for that? What do you need to do to make sure the money's set aside? Likewise, spring cleaning time, good time to go take a look at your employee benefits. What do I have access to? How does it work? Am I foregoing anything that I should be taking? If I'm married, how do I choose my benefits versus my spouse's benefits? All things that we cover in our brand new guide called 9 Tips to Spring Clean Your Finances. The guide is free. You can get it for free of charge by calling 800-393-4001. I know this is the time of year everybody likes to try and get organized ahead of summer when you don't want to be focused on this stuff. Spend a minute, take a look at your personal finances. Again, it's our 9 Tips to Spring Cleaning Your Finances. It's free at 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In news of the told you so category, China's economy has been rebounding after 3 years of zero COVID isolation. There was a lot of conjecture like, what's reopening really going to mean for the Chinese? Guess what? It's going to mean the same thing that it meant for the United States. When you're locked up in your apartment for 3 years, what you want to do is you want to go to a restaurant and you want to go on vacation. That's what the Chinese are doing.
Exactly. We saw with the
they're not that different.
We saw with the retail sales data that they had. They reported about close to an 11% increase in the month of March in terms of retail sales. Interesting to note, though, on the industrial side of things, production fell in that space. So
everybody wants to party, nobody wants to go to work.
Right. That's it. That's the story right there. Going forward, it seems as if China is going to be one of the few countries, at least for this year, that will continue to sustain reasonable economic growth. Largely, that will be due to the fact that consumers are going to fuel a lot of this economic growth through their spending. But longer term, you just wonder how sustainable is that?
Well, very quickly, the big difference is China did not pump their economy full of stimulus like we did here. So this is not going to be, in my mind at least, the same effect that we saw in the United States where everybody had this stimulus cash to go and spend. That's all the time we have for this hour of the Financial Exchange, but a lot more to cover. EV tax credits, who's getting them, and older Americans not saving for retirement. We'll cover that next on the Financial Exchange.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Chuck Zada from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the past 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit armstrongadvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you'd want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions that you may have about your portfolio strategy. That's armstrongadvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined by estate planning attorney Todd Lutzke from the law firm of Cushing and Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your brand new guide, Todd, How to Leave Assets to your beneficiaries. Now, what kind of considerations need to be made when you have a special needs child or a grandchild?
You know, folks, this is so important. So many people have children in this situation, and they oftentimes think that they need to disinherit their child from getting assets, because if they get them and you leave it to the child outright, they're going to lose their governmental benefits that they might be entitled to. Folks, please don't think that way. You do not have to disinherit your special needs child or grandchildren. Inside your trust, you simply leave assets divided equally to the children, right? And have it paid out for the ones who might want to have it paid out for. But if you have a special needs child, you have it held in what is known as a special needs trust. This trust allows the asset to be held in trust for the benefit of that child. It's the trustee of the trust that has the discretion to make payments out for that child. Sole discretion. That way the child doesn't actually own the asset. They can keep their governmental benefits, but the trustee can also use the money to better their lives. So they're better off by enjoying the assets of the trust, and they retain their governmental benefits, all without being disinherited.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets for Your Beneficiaries. Call now to get it at 866-848-5699, or you can request it from their website, legalexchangeshow.com. Once again, this guide will help you how to determine the best way to leave assets to your family. 866-848-5699, or you can request it at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, how does someone find out if they're taking advantage of all the benefits that their employer is offering them?
You know, it varies a lot company by company. Some companies have just really robust HR and benefit platforms where they walk you through it once a year. Hey, this is what you're eligible for. This is what you can step up to. This is the cost. This is the benefit. And it's, you know, I've seen those platforms. They can be really robust and really clear. Other times, it can be pretty complicated, and you do need to actually dig in, speak to somebody either over the phone or in person, and detail out, hey, what am I eligible for? What can I contribute to? And what's it going to do for me?
The big thing, though, is those options may change even from year to year. So even if you were taking advantage of everything last year, there might be new offerings from your employer this year that you just didn't know about yet.
Yeah, so I mean, big ones would be insurance coverages that are frequently offered with work. So it could be health insurance, life insurance. They might have different health insurance plans, and picking the right one for you and your family, which your family may change over the years, important to look at. Hey, can I get group life insurance? What are the benefits and drawbacks of something like that? What if I become unable to work for a period of time? Short or long-term disability. All things that sometimes employers provide that are important to review.
Our guide this month is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second option is to go and request it from ArmstrongAdvisory.com. That phone number again is 800-393-4001, or go to ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
April is National Financial Literacy Month. a good time to consider your life's goals and what you need to do to achieve them. Making dreams come true can be a daunting task, especially when it comes to understanding the best ways to manage your money. That's when having a trusted partner like a credit union proves to be of most value, because your financial well-being is at the heart of who we are, people helping people.
Learn more at bettervaluesbetterbanking.com.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zada and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zada and Mike Armstrong.
Welcome back to the Financial Exchange. Mike Armstrong, Paul Lane, and Tucker Silva with you on a bright and sunny Tuesday. We are still in the middle of earnings season here. We had a few banks report. Johnson & Johnson. I believe Netflix is reporting after the bell today. We'll have Tesla tomorrow, Morgan Stanley, IBM, United States Bank, U.S. Bank Corp. Thursday, we've got Philip Morris, AT&T, Union Pacific. I only mentioned Union Pacific due to all the train derailments recently. And then Friday, we've got Procter & Gamble reporting, and then another busy week next week. So we'll keep you up to date on earnings as they continue to come out. Certainly banks in the focus here as we had the Silicon Valley Bank collapse, so a lot of investors wondering and curious about what you're hearing from those other banks. And by and large, the regionals are not getting punished to any stretch. By and large, you're seeing that the big banks did collect deposits, regionals lost deposits, but doesn't seem to be hindering them too much except for certain circumstances here and there. Certainly First Republic still all over the news, but it seems to me as though the pain in stock prices has already played out since Silicon Valley Bank, because companies have started making disclosures around their positioning, and the earnings are just kind of tip of the iceberg, or already letting people know things that they already knew. According to Credit Karma, millennials aren't the only broke generation. So good job, millennials. You are not alone in all of this. But nearly 1 in 5 people aged 59 or older said that they didn't have a retirement account at all. 27%, so 1 in 4 respondents, said they haven't set anything aside for their later years, which, by the way, doesn't make any sense. Those numbers don't really make sense there, because 1 in 5 is saying that they don't have a retirement account, whereas a quarter are saying that they don't have any money set aside. But if you have a retirement account, if you're in the 80% apparently that do have a retirement account, then by definition you have set something aside for retirement, whereas you said some of them said they didn't. But nonetheless, pretty big number of folks 59 and over, right? This is not your 30-year-old who hasn't opened a retirement account or started saving for their future. And I get asked this question quite honestly, pretty frequently, like, hey, how do I compare? How do I stack up?
I get that too.
And my first answer is irrelevant. Like, it doesn't matter how much you have saved. It's all about how much you intend on spending, what your other income sources are. So stop focusing on what you have saved. Like, if you have nothing saved, but you've got pension income of $80,000 a year plus Social Security, well, guess what? In my mind, not really a big deal that you don't have anything saved for retirement. Don't worry about it.
And you have been saving because you've been contributing to that pension program.
So, one, don't worry about what the average is. It's not relevant to you. It's all dependent. Somebody with $5 million can be in far worse financial shape than somebody with $500,000 just based on their spending patterns and how they live their lives. So don't look at that. But I think for a lot of people, what's average? Well, quarter of people don't have saved anything for retirement. So long as you're beating that, you might be in a better overall position. But these are pretty concerning numbers, especially when you pair them with the conversations that we're currently having about government benefit programs. So, hey, what's going to be around in terms of Social Security? What's going to be there in terms of Medicare? I suspect that for somebody with no retirement savings and over the age of 59, that Social Security and Medicare are both going to be there for them without any penalties. But it is alarming, right, that you have this portion of Americans with nothing saved.
Extremely alarming. You took right where I was going to go with it. Social Security has been in the news. Its funding potentially to lapse in what's the new year?
2032, I believe.
32 or 33. Yeah. And either we've talked about potential solutions on the show before. It's either more taxes or cutting benefits, and I find it unlikely from a political standpoint that there's a significant cut to benefits, particularly to those who have no retirement savings. You're going to assume that those are perhaps not necessarily lower income earners, because it could just be people who spend every dime that they make, but it could be assumed that some of them would be, that you wouldn't see cut to benefits there. But Social Security benefits, as we know, particularly around this area, it's not enough to get by. It can't cover 100% of your expenses, or it's extremely challenging to do that. So it is really concerning. You hear these numbers often talked about, but to see it in multiple studies is really alarming, particularly over 59. There's just not a lot of time to make that up.
No. Well, I mean, look, again, I'm not going to conclude anything here, but for a lot of these folks, the reality is that there's not going to be a retirement.
Yep.
Now, if you're 59 and you don't have anything saved for retirement, well, then you're not going to be retiring at 65 in all likelihood, or if it is, it might just be a very different type of retirement than you and I might be thinking about. So but yeah, 27%. 27% is a very big number of respondents to reply that they haven't set aside anything.
I did like a nice acronym that came out of this Bloomberg piece, which is the FIRE movement, which I was unaware that this existed, but it's the Financial Independence Retiring Early movement of Gen Z. I didn't know that this was out there, but it's a great acronym that they put together.
Disappear once they have kids.
Yeah. Everyone says you want to retire early when you start working, and then you start working and you realize why you need to continue working longer than you would thought. Oh, I'll retire by 55.
It's tough to fully appreciate the benefit of health insurance when you're on your parents' health insurance plan.
Very true. Very true.
And the cost of health insurance when you're not paying for your health insurance. Once the company starts withdrawing that from your paycheck, and then you realize that they're covering 70% of it, and this is how much you are left over with, the reality starts to set in of like, oh, if I wasn't working, I'd have to pay for all of that?
My sister just started working as a teacher, and she got those first couple paychecks, and she started to understand why I complain, or taxes and all those other things and health insurance are so important to that net number, because it's staggering when you hear your gross salary versus what that net paycheck is.
I'm being mean. That's like total, what is that, Fraudenscheude? Tucker,
that's a Chuck question.
That's the joy in other people's pain or something along those lines.
That might be right.
That's not nice. But yeah, there is something compelling about that first time when you see like a 22-year-old get their first paycheck and all the taxes come taken out of it, and they're like, wait, I thought I got an awesome start, an awesome first job out of college paying me $60,000. Where did it all go?
We all have that. We all
what
have that
happened
bone
to
in
it?
our body. Our friend of ours got a dog, was up in the middle of the night, taking it out in the bitter cold of winter. And for us who have young kids, it was a satisfying moment for him to suffer with us because he'd been living the life before.
Yeah. Similar but related story. They can't even. A generation avoids facing its finances. So we just covered the baby boomers who haven't saved anything for retirement. The average credit card debt for millennials rose 29% to $5,800 in the month of March from a year earlier, and increased 40% to $2,800 for Generation Z. That's according to Credit Karma. I still don't know the context of these statistics that we're talking here. I don't know whether if this is the average credit card debt for credit card holders with a balance, or if this is the average credit card debt across all credit cards. But nonetheless, it speaks to credit card spending, which has been... The spending itself hasn't been low, but the carried balances have been exceedingly low over the last few years. And we are very simply just returning to normalcy here. Mm-hmm. If you take a look at the trend lines for where credit card balances, what you would expect them to be, taking out the pandemic period of time, we are still about on trend for that. And we are not at a stage where this is terribly alarming to me. But from a personal finance, from a overall economy perspective, I suppose I will say, I'll caveat that. None of the credit card debt totals that I'm seeing out there make me think, oh, we are heading for a crash imminently. For the individuals that are racking up this credit card debt and sticking their head in the sand, my only advice is please don't.
Right. We're coming.
Don't stick your head in the sand, most particularly. That seems to be a reaction that I'm seeing quite frequently from adults, young adults especially, of just saying, got all this student loan debt, and I just, to be honest, I just didn't look at it for 2 years. What?
Yeah.
You can't do that.
No.
It's not just going to go away.
No, it's not.
It's not like an ex-boyfriend.
I declare bankruptcy.
Not how it works. You can't just ignore it and assume that it's going to go away. That's not how debt works, especially, and I think that's been, well, there are plenty of people that have learned that lesson the hard way.
It's to be expected coming off the pandemic where we're never likely in our lifetime, hopefully there's not another pandemic, going to see the savings rate that we saw during the pandemic. So you had those balances being spent down. What happens when it gets spent down? You rack up credit card debt.
We're going to take a quick break here. When we come back, we've got some trivia. We're also going to be joined by Ted Rossman from Bankrate. He joins us every once in a while. Now it's about the new rules, the new money rules for couples. Stay tuned right here on the Financial Exchange.
The Financial Exchange has a brand new text code. Text us at 617-362-1385 and keep on top of breaking business news all day long. This is the Financial Exchange Radio Network.
April is National Financial Literacy Month, a good time to consider your life's goals and what you need to do to achieve them. Making dreams come true can be a daunting task, especially when it comes to understanding the best ways to manage your money. That's when having a trusted partner like a credit union proves to be of most value, because your financial well-being is at the heart of who we are, people helping people.
Learn more at bettervaluesbetterbanking.com.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Financial planning never sleeps, so as spring comes into full swing, now's a great time to spring clean your finances. The new guide from the Armstrong Advisory Group may help you do just that. This is Mike Armstrong, and our guide talks about planning for a one-time expense this year, like a new car or a long family vacation, and how that might affect your finances. We'll also look at how to plan for any upcoming major expenses in future years, like buying a new home or paying for college. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's yours free of charge by calling 800-393-4000 4001. This guide's chock full of information that may help you understand how to handle any changes you're dealing with now or may deal with down the road. So call right now and get yours today. Again, that's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699, or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
We're joined now by Ted Rossman from Bankrate. They've done a series of questions and answers and surveys from couples about how they handle money, and the trends seem to be changing a little bit. Ted, thanks for coming on. Appreciate it.
Of course. Thanks for having me.
So, Ted, first, and I always find this one interesting, how different generations look at their personal finances and combine them versus keep them separate. What did you find in terms of how different generations are either keeping their finances completely separate, which is a little bit of a foreign concept to me personally, versus keeping them entirely together?
Only 26% of Gen Zers and 33% of millennials completely combine their finances with their significant other. And we're talking here about people who are either married or living with a romantic partner. Okay. So only about 1 in 4 Gen Zers, 1 in 3 millennials. That compares to about half of Gen Xers and Boomers. So there is a pretty big generational divide there.
Yeah, I fall into that 2/3 bucket. We do not completely combine. We each maintain our own separate bank accounts, but then also some joint accounts. What did you find in terms of attitudes and habits when it comes to keeping financial secrets, if you will, or not fully getting into their personal spending habits? I would assume if there's an attitude of keeping financial details separate, that perhaps keeping some of those secrets is also a different trend than what we've seen in previous generations?
Young adults are far and away the most likely to be keeping financial secrets. 63% of Gen Zers have committed some sort of financial infidelity against their romantic partner. So that's secret spending, secret debt, secret credit cards, secret bank accounts. It's only about half of millennials and only about 30% of Gen Xers and Boomers. I think there is some crossover between these two topics here. I think that the desire for separate accounts goes hand in hand with hiding things. I think the fix here is communication and perhaps the yours, mine, and ours school of budgeting. I think it's fine to have some separate money and some joint money. In fact, a lot of people like the independence that fosters, but you need to agree on the parameters. You can't just be squirreling money away without the other person's knowledge.
Ted, what has our economy over the last couple decades done to trends in terms of big milestones? So whether it's getting married or buying a home, what are you seeing in this younger generation versus previous generations when it comes to home ownership and marriage?
People are getting married much later. They're having kids later. They're often buying homes later. These are all important trends that are affecting Gen Zers and millennials. I actually think some of this relates to the desire for separate accounts and keeping the financial secrets. If you've been living on your own for a while and you have your own salary, it's hard to mesh that money personality with someone else's. So I think that's interesting. I also think the fact that more and more people are buying homes before they're married is another really interesting trend.
Yeah.
Realtor.com says 41% of 18 to 34-year-olds have bought a primary residence with someone they're not married to. I just think you need to be careful about that because, of course, a married couple can split up too, but divorce is a very organized process. If you're just dating somebody and you buy a house together, I'd be a little worried about what happens there. You need to be very clear about the mortgage, the deed, are you going to sell it and split the proceeds? Is somebody going to buy the other one out? This is a trend that makes me a little nervous.
Yeah, that does get a fair bit more complicated when there's no marriage in place. And that is a big number, 41% of 18 to 34-year-olds buying a primary residence with someone that they're not married to. Ted, when it comes to financial details, are you planning on rolling out a new dating app or something with this? Because you mentioned that a huge portion of Americans would want to know somebody's credit score before considering dating them.
Yeah, it is really interesting. There's so much crossover these days. In fact, there's this whole new school of financial therapists that are kind of part relationship counselor and part financial planner because this is important to people, especially young adults and actually women considerably more than men say that they're interested in knowing someone's credit score and that would really impact their romantic interest in dating that person. It's tricky. I mean, it's probably not a first date kind of topic, but it seems like it might be an early in the relationship topic for a lot of couples these days, at least the general parameters. Are you responsible with money? How do you feel about money? It feels like for some people this is really a deal breaker.
Just list your Social Security number on your dating app, I guess, and that would allow them to pull the credit report there. Just easy solution right there, huh?
Young adults share everything. I mean, I think that's another common thread in this conversation. I think that, it is interesting how they keep financial secrets, but yet they share everything else. They share their credit score. They share their salary. That's something that comes up not just with romantic partners, but coworkers. That's something that young adults are far and away more likely than older adults to talk to their friends and their coworkers about how much money they make. Some of it, I think, is social media has broken down some of these taboos, but like we've said, maybe they've actually put up some walls in other areas where it's harder for people to mesh their money values with someone else's.
Ted Rossman from Bankrate, his article out on Bankrate.com, New Money Rules for Couples. You can take a look at it yourself. Ted, thanks for joining us. Appreciate it.
Thank you.
All right, time for trivia here on the Financial Exchange, brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Well, today is National Animal Crackers Day. It's a day where we celebrate our domination over the animal world by biting the heads off animal-shaped crackers, of course. What?
Said we sure do.
Yeah. Animal crackers first came to the United States in the late 1800s when the U.S. imported animal-shaped cookies from England in 1902. Animal crackers officially became known as Barnum Animals and evoked the familiar circus train theme of the Barnum and Bailey Circus. Later that same year, Nabisco added a string to the box of animal crackers. Our question today, why did Nabisco add a string to the animal crackers box? Once again, why did Nabisco add a string to the box? Be the third person today to text us at 617-362-1385 with the correct answer. and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor, which we'll give away on Friday's show. 617-362-1385, and the third correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Taking a quick look around at markets, we've got all major U.S. indices in the red for the day. Dow off about 0.33%, S&P 500 off 6 points, a little bit more than 0.1%, and the NASDAQ also off about 0.1%. Russell 2000 off about 0.5% in early trading so far today. Oil slightly up. U.S. West Texas crude trading at just shy of $81 a barrel.
This is Tucker Silva of the Financial Exchange, and I'm joined by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. How can you ensure that your kids' inheritance can be protected from future divorces?
Well, that's a great question, and many people want that, right? You never know where your assets are going to end up if your children get divorced after you die, right? That's really the key. And so a trust can do that for you, folks. When you have assets in a trust, you can design it any way you want. Have it set up where it says equally to the kids, and then have it held in trust. You can allow the kids to be trustees of the trust, but you allow them to manage and invest the buckets of money, which they can't take from each other and from each other's bucket. But in order to get money out for themselves or their own kids, they would need another trustee in their sole discretion allow for that. And they can remove and replace this other trustee anytime they want. And it's that sole discretion with all this control that prevents them from actually owning it. And so when the divorce comes and they want the money, for the other side wants the money, the other side says, here, give me half the money that's in the trust. They say, ask the other independent trustee. Sole discretion, folks. You see where it goes. If they don't own it, it's not a marital asset. It's not subject to the divorce. The trust owns it.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called How to Leave Assets to Your Beneficiaries. Call now for your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family. 866-848-5699, or you can request it at legalexchangeshow.com. Once again, 866-848-5699, or you can get it at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings.
Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Spring is here, your taxes are coming due, and if you're considering some changes to your financial structure, our new monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline a host of different issues that may affect you going forward, like evaluating any income changes for 2023. If you're retired or getting close to retiring, it's important to understand how a change in income can affect your long-term planning. It's also a good time to review or update your estate plan, because as you get older, circumstances may change, so you'll want to take a look at your plan to ensure that your assets are protected. Call right now at 800-393-4001 and request your copy of our new free guide, 9 Tips to Spring Clean Your Finances. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Trivia question today was, why did Nabisco add a string to the box of animal crackers? Well, that would be to use as a Christmas ornament. Yes, that string that was once attached to a box of animal crackers used to allow parents to hang the box on the Christmas tree like an ornament. Nabisco first introduced the string box in 1902. However, in 2018, a redesign of the packaging eliminated not only the string, but the image of caged animals. The new artwork depicted wild animals on an African backdrop. And our winner today was Brandon from Tilton, New Hampshire. He's taking home that Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Encore Boston Harbor, which we'll give away on Friday's show. And trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
You guys want to know who makes the single best? I'm going to insult Nabisco here, but there is a other company that makes the single best animal crackers that I've ever. Actually, I think they call them animal cookies because they're not technically crackers.
Mm-hmm.
Wegmans brand animal cookies.
Are they good?
Oh. Yeah.
Are they frosted or are they the same setup?
Same setup, but it's more of a cook. It's as though you're eating. Remember Dunkaroos?
Yes.
Oh, yeah.
It's like the cookies from Dunkaroos.
Got it.
Effectively in the shape of an animal cracker. And they come in like 10-gallon jugs. 10 is probably a bit of an exaggeration, but top-notch stuff. If you can get yourself to a Wegmans and get yourself the Wegmans brand animal cookies, just can't be
$10.99.
And a steal at that. The new EV tax credit has come into place. You're looking at a potential $7,500 tax credit, but only for a very select number of brands that actually do their battery and other manufacturing here in the United States. So if you're considering one of these, a few different pieces of information. One, if it is a van, truck, or SUV, price needs to be under $80,000. If it's a sedan, it needs to be under $55,000. I happen to think that's a stupid qualification. Just if you want to drive people towards a certain type of vehicles, then do so and do it with price, and they'll build SUVs that will. Now all everyone's going to do is build a small SUV for $79,000. That's going to be the target for these small car companies or these EV companies. The buyer must have a modified adjusted gross income that is less than $300,000 if you are filing a joint return. Single filer, $150,000. And then the manufacturer must meet certain battery sourcing requirements for the partial $3,750. It must have at least 50% of parts made in North America, or 40% of critical minerals sourced from the U.S. If you want the full 7,500, then you need to have both of those. So where we sit right now is there are about 10 cars that actually qualify for this at this stage. It's the Cadillac Lyriq, the Chevy Bolt, Chevy Silverado, Chevy Blazer, Chevy Equinox, the Chrysler Pacifica plug-in hybrid. Full 7,500 for a plug-in hybrid. I like that idea. Ford F-150 Lightning, Ford Aviator plug-in hybrid, the Tesla Model 3, and the Tesla Model Y apparently all qualify currently for this $7,500 tax credit. I think this play here is you got to go design those plug-in hybrids
to get the full 7,500, but still have.
If you're a car company, forget about making a full electric vehicle. I've got to source all the. Forget that. I can make a tiny battery with the plug-in hybrid and still make a gas-powered engine that's going to get a $7,500 tax credit. I would jump all over that if I were a car maker. That's going to be so much easier than trying to source the full battery requirements in the United States for a full 300 mile per charge EV. Oh,
the sourcing part, like you mentioned, that's going to be the biggest hurdle to get through. It does sort of jive really well with what Tesla was mentioning in their recent call, where they're focusing more of their production in Mexico because, as you were mentioning before, North America is where you have to be eligible to get these credits. And it seems like Tesla is shifting away from China and more of a focus on Mexico for production, largely tied to these incentives here.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
We're, I think, beginning to start to see a trend when it comes to remote work that I believe is going to pick up the pace here over the next few months and years of finally returning to the office to some degree. There's a story from the Wall Street Journal today about how companies are starting to pay relocation bonuses again. In fact, the job postings in the U.S. that mentioned a reload benefit were up nearly 75% as of February. What I think I'm getting to is that if you want a fully remote job, there's going to be two requirements of you. One, you need to have a pretty specialized skill set that somebody really wants. Mm-hmm. So maybe you are an engineer that is working for a technology startup that really needs your skill set and has the technology in place to allow you to work remotely. Two, I think you're going to forego compensation by demanding fully in-person work. And it's not that the company's going to come back and be like, oh, no, I'm paying you less because you. But I think you're going to have to be so selective with your job search that you're going to end up finding a company that is only willing to do the fully remote thing for a lower compensated employee. That was the message I heard from an employer last week, where they said, we do like having in-person workers, but being able to hire fully remote ones opens up our talent pool so dramatically that we can keep wages at a more reasonable rate than trying to hire them in person in the Boston area. So that's who I think is going to be able to work fully remote. Other than that, the drive that I keep hearing from companies is that while it wasn't an issue at the beginning, we are seeing a massive divergence in both productivity and satisfaction of employees for those that are working all remote. It's just worse for them. Mm-hmm. On the whole, there are exceptions to all of these rules, but they've really started measuring this stuff. And I think a lot of companies are realizing, finally, and I think they realized it before, but it took a while to convince people, that we need to have people here at least a few times a week, especially with newer employees.
Of course. The newer employee thing makes a ton of sense. They don't have the rapport with their coworkers, and that is better developed in person than the formality of Zoom meetings, which are more difficult to build that type of rapport. We had always talked about it's a pendulum, that it will swing back in the other direction, and once the labor market loosens up, which I don't know if we're anywhere near that point.
There's no indication that the labor market is loosening.
Yeah,
up
with
right
the participation rate, we've talked about the prime age participation rate being at the highest level in years. So that's not going to be the place to shake it up. But it does seem like if you are a lower level employee at name any company that doesn't have the advanced skill set that you're mentioning, they're just not going to play ball and let you work remote because maybe they have enough staffing, or we had covered another article on the show where they just outsource it elsewhere. If you think you can do it remote, then we'll do it remote.
That is true.
Else.
That's the other danger to all this that I will be interested to see. How many of these jobs that I'm hiring somebody in Colorado for a Massachusetts or New York company can actually be done in India instead?
Mm-hmm.
Not many of them, not a ton of them, but boy, we sure did get comfortable with it over the last few years. So I do wonder how that all changes. To the advantage side, I don't like to make this all negative. If you're somebody who is going into the office and more than is required of you, or just even what's required of you, that apparently is making you a standout in this day and age. So I was talking to somebody at Salesforce, actually, and they're like, the people who are there every day, like, I'm not intentionally doing this, but I'm just getting to know them better from a management perspective. They're getting more exposure to management, and they are just, by nature of getting to know them more likely to be the next person, promoted and up for that next job. And so I think that is the other piece of this is you can play it to your advantage in a world where nobody wants to work in the office. If you choose to do so, you're apparently standing out to some people. So I found that interesting as well. Quick break. When we come back, we've got Stack Roulette here on the Financial Exchange.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
All of us at the Financial Exchange are excited about this year's DAV 5K. Save the date for Saturday, November 11th for this year's race, again to be held at Fort Independence at Castle Island. Our partnership with the Disabled American Veterans Department of Massachusetts is a cause that's near and dear to all of us. So visit dav5k.boston to make your donation today. Your gifts can sponsor veterans family member at summer camp, as well as veterans who are homeless or hospitalized. That's dav5k.boston.
Time for a little stack roulette here. Paul, what do you have for us?
McDonald's is bringing back the Hamburglar to promote some of its burger changes. Now, the changes that they've mentioned here, to me, Mike, are a little confounding. They don't seem to be, it's sort of much ado about nothing. They claim that in addition to adding extra Big Mac sauce and softer buns, they tweaked their cooking process to, quote-unquote, get hotter, meltier cheese. Okay. I don't really know how that is a substantial change to their burger. I love the Hamburglar.
If it were a substantial change to their hamburger, they wouldn't need to trot out the Hamburglar to make the announcement, I suppose, is the answer for you, Paul.
I love the Hamburglar, so that's fantastic.
I think there have been times. I mean,
just a fan of crime there, Paul?
Just love the look.
There's been instances where we've all suffered getting a burger that's like just room temperature and barely melted on your cheese or on your burger. So maybe they got too many complaints for this. I don't know. They had to issue a press release about this, though. So
yeah. Well, good luck, Hamburglar. Best wishes. I'm excited about your nostalgia factor, and we'll see how this goes for McDonald's.
Well, it sounds like they tried to relaunch him in 2015 to promote certain menu items. They put him out, though, as a bearded hipster with a trench coat.
Sipping an IPA.
This is true. I'm reading it right from the piece. Who had a craving for a new sirloin burger, but they phased out that limited menu item when it expired later that year. But I hope he is back with his jailbird suit this time around.
Don't they realize that nobody likes hipsters? Come on. What are they doing here? Lululemon, famous, expensive fitness wear company. I was just taking a look for a frame of reference, how much it costs to buy some men's pants from Lululemon, which, by the way, they do sell. I'm looking at $130 a pair, so I'm probably going to pass personally. But this company also went out there and got a little bit out of their comfort zone. Back in July of 2020, they acquired fitness maker Mirror. So what is Mirror? It's a mirror that you hang on the wall, and it's actually more of a TV, but it also gives you a mirror, and it tells you different exercises to do. It comes with a subscription product, and for anybody that says this rings familiar, well, it was a time when Pelotons were taking off and you literally couldn't find them. People were, fighting for them in the streets and selling them for quite a bit more than they were worth on Facebook Marketplace. For frame of reference, I just looked this up. In the month of July, and I don't know exactly when Lululemon purchased Mirror, but they did it in July of 2020. Peloton, for frame of reference, was trading between $59 a share and looks like high 60s per share. Today, Peloton stock below $10 a share, as we're all aware. Now, Peloton did get up quite a bit higher than that. They were trading at like $160 a share by December of that same year. This reads to me that this product has the same problems, if not more problems, than Peloton had, which is, yeah, we were all excited to use this type of thing when we were all locked inside. But guess what? Now that I'm not anymore, I'm not going to use it anymore.
The fitness industry is always a really difficult business to be in because it's so predicated on fads and trends. Even more so is it difficult during the pandemic, which spurred on, as you mentioned, these changes about working out from home, which have quickly gone to the wayside. I mean, it's still incorporated in people's day-to-day fitness lives, but there's so many other options out there. It's such a competitive space, particularly when you can do in-person stuff too. So
we'll probably never find out. It probably won't be disclosed what the price is that somebody pays for this, but I'm willing to bet, I'll lay my guess out there that it's less than $100 million. I think they're taking an 80+% loss on this product.
It's right in lockstep with what you've seen from Peloton stock decline in their valuation as a company and how they've been discounted. So I wouldn't be surprised either. Particularly, it's not Lululemon's core competency
I don't
either.
understand a lot of companies when they do things like this. You just scratch your head and say, "What do you sell clothing?" And you do an excellent job. I think it's preposterous how much people spend on this stuff, but they do. It's like Apple. They love the brand. They love to show it off, and it's good quality. And you're really good at that. Why did you do this? It's not in your core competency. You don't hire gym instructors. You don't. I know it's similar to what you do. I know that your customers also go to workout classes.
It's adjacent, yeah.
But man, just a big execution risk here. And if you're not willing to really dedicate the resources to it, it seemed like a misstep at the time, and it seems like a misstep now. Tucker, you were trying to say something.
I was just trying to think of a good comp, and I don't know if I have one.
I mean, look, I think Apple's the only company that I can point to that has been very successful at throwing other stuff at the wall and seeing what sticks, but they do so by creating their own product, right? Like they see stuff going on in the headphone space and think, hey, that's interesting. That's adjacent to what we do. Maybe we can make some money on that. They see something going on in the watch space. They don't go acquire a giant watch company. They go and build it themselves and create a user experience dedicated around their existing infrastructure. This was just, hey, let's go buy a company that happens to be really popular right now and see how it works. And we'll see. Maybe I'm missing the boat on this, and they're going to double what they paid for it and selling it off. But it doesn't read like that.
No, it doesn't read like that. And there's just no way, after taking impairment charges on the product, in some of their products, that I think it's tied directly to Mirror. There's just no chance that they're selling at a profit.
One last item for Stack Roulette. Nurse shortages are pushing hospitals into the gig economy. What are we talking about here? There's apps that are popping up. I think I first reported on this before the pandemic a few years ago, that there was a nursing app that you could basically bid on shifts for. That is what is being used more and more frequently among a number of different hospitals across the country. An app from ShiftKey lets workers bid for shifts. Another one called CareRev helps hospitals adjust pay to match supply. Sounds good in theory, right? Like, hey, maybe I'm a nurse and I was full-time, but I'm caring for my family. But, hey, there's a shift this Saturday that I could pick up and get paid a whole lot to go work that shift. I really do question how successful that is if I'm jumping in for one shift at a hospital that I've never worked at before. Like, how much institutional knowledge is required to be there for a nurse to be successful on one shift at one hospital that I've never worked at before?
Yeah, it's one thing to do the traveling nurses where they're working there for a period of time, but that's sustained over months versus just a one-time visit. That's
all the time that we have for today's Financial Exchange, folks. I hope you have a great one. Markets remain open, slightly in negative territory. Dow still off about 1/3%. S&P and NASDAQ off about 1/5% as we close out the show today. We'll see you tomorrow when we're back at it. Have a great day, everybody.
If you could